Hey everyone, Lex over here, and if you're watching this right now, that means you're a current student of mine, and I have a very important message that I want to share with you guys, and it's related to this current situation of what's going on right now with this whole COVID-19 situation, all right? So, you're my student, you're logging into the training site, you're going through your training materials, that's awesome, but here's what I want you to understand, and I think too many of you are not really comprehending this. There has been a major situation in the marketplace, probably the most major situation since the previous financial crisis of 2008. And what that means to you as a real estate investor and as a student of mine is you're going to need to adjust how you operate in this market. So let me just go through that real brief so that I can cover that for you. Number one, if you're fixing and flipping, you have to assume that there's a price reset, and where you're selling things today or last week or last month is not where you're going to be selling things 6 months from now. So if your typical fix and flip takes you 6 months, you need to build a safety margin in of around 15 or 20%. So if you were buying a month ago at 100, you should be buying now at 80. That's number one. If you're wholesaling and you're a wholesaler and you've got something under contract, you should reset those contracts because you're going to have a hard time moving them, because buyers like me are going to build a safety margin in of around 10 or 15 or 20% depending on what area of the country that you're in, right? So if you're in a more volatile area like Florida, which has been very heavily hit because of the tourism industry, your safety margin is going to be lower than if you're in an area where, like the Midwest or Kansas or something, where everything's just kind of moving along, right? So keep that in mind. So if you're looking to wholesale and sell houses to investors, especially those of you that are new, especially new students and new coaching students that have signed up in the last couple of months, I know you're eager to get started, but guys, you need to understand that there has been a pricing reset. So take your foot off the gas pedal, slow down a little bit, adjust your offers 15 or 20% below, and keep operating. You need to understand this market has moved in 30 days from a seller's market to a buyer's market. What does that mean? A seller's market is when the seller dictates the price, meaning they want to sell their house for $200,000 and they don't think they need to discount it to $190,000. Well, that was the situation a month ago. Since then, Zillow has stopped buying houses, Open Door has stopped buying houses, OfferPad has stopped buying houses, Redfin has stopped buying houses. Those are the largest four institutional buyers. Hard money lenders have reset and readjusted their buying criteria. So if they were loaning at 90% LTV, now they're loaning at 80% LTV. Out of the 5 major institutional private lenders, 3 are not lending at all right now. All right, so if you're looking to get a hard money loan, it's going to be way harder today than it was just 30 days ago. How long is this situation going to stay like this? We don't know. We don't know what it's going to be like. We can only guess and anticipate. But what I will tell you is this: the market has shifted, right? This is now a buyer's market. So a month ago, a seller could tell you, I can sell it for X on Zillow. In 3 to 6 months, buyers will be begging you to buy their house. Why? Because if you run the numbers, and there's 17 million people that have been laid off in the last month or so, let's say 12 million of those get hired back and 5 million don't. And 65% of those 5 million own a house. That's a lot of foreclosures coming down the line. All right, so that's where we're going to be seeing things happening in 6 months. So how do you operate in this environment? Well, luckily for you and me, I started my business in the previous financial crisis of 2008. So what you're going to see is short sale opportunities, bank-owned property opportunities, foreclosures. People don't pay their mortgage, the property goes back to the bank, they lose their home, which is an unfortunate situation for them, but it becomes a bank-owned property, which means you can now bid on it. So right now, 30 days ago, you could not find inventory. The only way you could find properties was by marketing to people with postcards. That's going to change. 3 to 6 months from now, there's going to be properties on all the online auction sites and on the MLS for you to bid on. but just make sure you adjust your pricing. So if you're looking today at a property and you're using comps from 30 days ago, understand that those comps are not going to work for you right now. All right? So I just want to make sure I'm pointing that out, because I think a lot of you, especially those of you that are beginners and have not been through a market like this before, you're operating as if nothing happened. You're coming to my boot camp, you're reading the material, and you're going out and doing everything that you're seeing on the training site. I need you to understand there has been a shift. There is a pricing reset. As of this moment now, offer 15 to 20% less than what you would have offered just 30 days ago. All right, guys, go out there, keep operating. Now's a very, very good time to learn about foreclosures and short sales and how the foreclosure process works and how the REO process works and how to put a short sale together. And while you're at it, this is a good time to learn about buying houses on terms and seller financing and lease options. All right, so there's going to be a fabulous opportunity to make a lot of money right now, and the way you can focus on this is focus more on buying cheap and wholesaling for small profits and doing that in volume. If you're lucky enough to still have a job and good credit, focus on buying occupied rental properties with tenants in place that you can repair, rent, refinance. But if the tenant's already in place, you don't have to do the repair and you don't have to do the rent. It's already done for you. All you have to do is the refinance. And right now, that's working. We've got 3 deals this week that we sold with regular financing and FHA financing, and that's working in this market. All right, so buying cheap and fixing up and selling to first-time home buyers will work for you, but you have to stick with the entry-level product, bread and butter, low price. What works, the typical tier 3 kind of neighborhood is what you want to be focusing on. Stay away from expensive stuff, stay away from condos, stay away from multifamily, stay away from gutted houses. Anything with risk, stay away. Stick with the basic bread and butter 3-bedroom, 2-bathroom house that you can buy at around 60% of the median price for your county. All right, guys, so I hope that helps you. If you have any questions about this or in general about the real estate market, make sure you go ahead and send a support ticket in to supportdesk@lexrealestategroup.com. And guys, you're about to witness one of the greatest opportunities of your lifetime to buy real estate. So if you never managed to pick up that rental, well, you're going to get a shot at it. Not only that, interest rates are at record lows. So you have an opportunity. I just locked in a 15-year mortgage, guys, at 2.25%. So if inflation's higher than that, they're pretty much giving away the money for free. So if you've got a job and you've got credit, start looking for a rental property now. All right, guys, hope that helps you. Go make some offers, and if you have any questions, submit it to supportdesk@lexrealestategroup.com.